Hello, I'm Debbie Bell-Hosking from FinextraTV here at Finextra's inaugural NextGenAI event in London. And I'm joined by Stathis Onasoglou from Google. Stathis, a big welcome to the studio here.
Pleasure to meet you. Thank you for having me.
Lovely to have you. I know you were in a panel earlier talking about NextGenAI and customer uses. But first of all, can I chat to you about what the trends are that you are seeing in the fintech zone?
Absolutely. A lot of exciting things are happening in the fintech world. The overarching theme is now everywhere and smarter, meaning basically more real-time, omni-channel experience from a customer point of view, and more intelligence, sometimes meaning conversational experience, or basically faster, smarter insights.
So I love that stuff. There's now everywhere smarter. How does that develop into use cases? Do you have any examples?
Yeah, absolutely. If you look at payments and banking, for instance, obviously in the SEPA region, we are moving to instant payments, which means settlements within 10 seconds, much more real-time experience from the end customer point of view. However, unfortunately, that probably will mean also more real-time financial crime. And on the other hand, on the positive side, will mean also much more real-time customer support. If you look at capital markets, for instance, we've worked with a large tier 1 UK headquartered bank, for instance, to move their trade surveillance systems from a rules-based system to a machine learning powered system. That basically proved to be 20 times more efficient in terms of identifying fraudulent patterns, fraudulent activity. That's not 20%, it's 20 times. So that was quite a significant change there. If you look also at risk management, for example, risk identification and risk valuation is becoming much more real-time, intraday. Instead of being calculated in days or hours, basically we can calculate things like value adjustments, very complicated calculations, or compute-intensive calculations within minutes. What that allows the investment banks to do basically is not just to tick the regulatory box, so to speak, with things like FRTB and MiFID II, but more importantly is to link the risk management office, the middle office, with the front office. So in one particular case, working again with a tier 1 investment bank, we were able basically to reduce the time of XVA calculations, a very particular calculation which is quite compute intensive, down to 10 minutes. That allowed them basically to build a user interface for the traders in the structured products desk to run what-if scenarios, multiple what-if scenarios, so they were able to know the risk that they were undertaking, but also to hedge their portfolio in a much more cost-effective way. Now that's capital markets being more real-time and more intelligent. If you look at payments and retail banking, there is a significant move towards instant payments in the SEPA region, but also if you look at Brazil with PIX and India with UPI, in the UK we have faster payments, which probably is going to move to a new settlement cycle which is going to be more real-time. Now, that means much better experience from a customer point of view. And on the bright side, it will also mandate much more real-time and smart interactions with the customers from a customer experience point of view. Now, from a financial crime point of view, I'll give you just one example how AI is employed. We worked with another very large bank in the UK to implement an anti-money laundering system, again based on machine learning instead of rules, basically. And that reduced by 60% the false signals that they were getting, while in parallel, it increased basically the identification of real fraud cases. So false positive, being the technical term going down, and true positive, so true fraudulent cases, were increased. That not only helped with the customer experience side of things, because you can imagine that every time that someone identifies a fraudulent case, it's not a fraudulent case, the operations need to pick up the phone basically, call to the customer, ask them if you were the one that passed the payment through. And that is not ideal. If it's not a true fraudulent case, it's not ideal for the customer experience. So it helps with the customer experience, but also it helps significantly with cost optimization, basically. For that particular case, it meant millions of pounds in reduction in terms of the budget of that particular function.
And Stathis, if I go back to the panel session you were on today, and it spoke about GenAI and its importance, or use rather, to the customer, what is your point of view on that?
Yes, that's a very good question. So this year has been the year of execution for generative AI, and we've seen some real outcomes out of that. I'll just mention an example. So we conducted research earlier this year with 340 senior IT leaders across the financial service industry. 63% of them mentioned that they have GenAI powered business cases in production. So real business cases in production right now. 90% of them, 90% of the cases that are in production, were able to be linked with 6% or more revenue generation, additional revenue generation. So number one, GenAI in production potentially means more revenues. We've seen also cases that lead to operational efficiencies in terms of individual productivity, and we've seen quite a lot of business cases linked also to cost efficiencies.
Wonderful. Thank you, Stathis. And there you're talking about tangible value, which is good to hear. Thank you so much for joining us today.
Thank you very much.